Welcome to our commercial real estate series, Behind the Building, giving the audience a behind the scenes look at different aspects of commercial real estate, featuring industry professionals and leaders who we work with every day to make it all happen. With me today is Kelly Davis, who brings more than 2 decades of insurance and risk management experience to the conversation, guiding business owners, property investors, and entrepreneurs through some of the most critical financial protection decisions they'll ever make. Welcome, Kelly.
Thank you, Emilee. I really appreciate this opportunity.
Happy for you to be here. This is an important topic, and we want to get the word out on how it's a critical part of your planning when you're a property owner and a business owner. So let's just dive in, and can you give me a high-level explanation of what Key Man life insurance is?
Key man insurance is basically a policy that the business takes out on either a crucial employee or a business owner, if there's multiple owners. The purpose for that insurance is the funds can be used to offer financial support and stability for the business. In case they have the absence of that crucial employee due to disability, due to death for that life insurance policy. That stability comes in the form of being able to pay off any kind of business loans, operational costs that are going to continue with the absence of that crucial employee, and also funding any kind of buy-sell agreements that could happen.
Okay, so tell me, what is the difference between Key Man insurance and a buy-sell agreement?
Well, the Key Man insurance is a funding source for a buy-sell agreement. The buy-sell agreement in itself is a legal contract between the business partners or business owners. It's basically setting in stone what that buyout would be in case of a triggering event. Those events could be death, disability, retirement, or even divorce, if you have married couples in business together. When those triggers happen, we need to know what the escape plan is to get out of the business so the business can continue forward.
So why do you think these policies are often overlooked? Who's talking about them? I'm not hearing a lot about them in my day-to-day. So tell us, why aren't we paying attention to this really important topic?
Well, as a small business owner, your first and primary focus is to get that business up and running, and you're dumping as much money as you can into it and getting as much money back out as you can. So you're looking at the marketing, you're looking at the product, you're looking at the sales opportunities. An overlooked item typically would be the succession plan of the business, because you just started it. You're not even thinking about the concession. You're thinking about the construction of the business.
Mm-hmm. Gotcha. So as it applies to commercial real estate specifically, how does Key Life Insurance apply to commercial property owners, landlords, or investor partnerships?
Yeah, the key man policy, or key person policy, I like to call it now, it protects the business. So you can have a key policy written on, owners. You can have it on special managers or even specialists that have unique skills inside of your operation. Bottom line, you want to look at it. If something happened to that individual, my business would falter. And it's going to falter until I can get that person replaced or get somebody of equal value in the business. And sometimes that's difficult to find, especially in a specialty manner.
So as we drill down more, like in a real estate partnership where several people may co-own or manage an asset, what risk exists if one of them dies or becomes disabled? You've alluded to it a little bit. Expand a little bit more.
Great question. When you have multiple owners of a business, whether it's an LLC or partnerships or what have you, the owners are in business because they like each other and they bring certain qualities together for that business to succeed. And if one of those owners dies unexpectedly, then the spouse of that passing owner is typically now brought into the business due to the fact that that's their heir. That spouse may not really see eye to eye with how the business was running. It could cause a lot of difficulties with the business continuing. And if there's no agreement set in place, then state laws can come into play. The family is due their fair share of the business. Now you have one that has passed. The business may not succeed as well as it had been, but yet you're still obligated to make sure that the heirs of that deceased owner get their fair share. It can be a daunting task.
And so this is just such a more proactive approach if you can handle these things ahead of an event instead of being in the mire and the emotional difficulty after a passing or an event like being disabled. Yeah. So can you walk us through a real world scenario that you've experienced, or an example of one, a buy-sell agreement that was properly funded?
Right. So I won't get into names and disclose any of that, but if you've got two really good friends that have come together and they formed this property management company, they've got a lot of properties. One is really good at the sales side and acquisition of properties. The other one is really good at the maintenance side of all of these properties. So they have formed this company and they are rocking and rolling. Okay. If one of those two, either one, passes, the continued success of that business will be in great question. So let's say that the person that does the maintenance passes unexpectedly. You've got the surviving owner is ready to continue business, but now they have no person that's doing the maintenance of it. They're going to have to now pay for that, find somebody that they can trust, and at the same time have to worry about that passing and their family getting compensated. Mm-hmm. So with this particular situation, a key man policy was able to be purchased for the business, and that allowed the business to have funds to go and purchase someone or hire someone to do that maintenance, or a company. The buy-sell agreement was funded by a joint life policy that both owners came in and jointly applied for the policy. So at the first death, the business received those funds that they then can pay out to the deceased family as a payout, and the business continues to move forward.
As we know, lots of businesses, they require financing from lenders, banks, and I just wonder what you see in the marketplace and in bank and lending underwriting. Do they ever require those kinds of insurance tools or policies for certain types of loans?
It's a great question, Emily. Lenders do not require buy-sell funding. They may require business to have a sufficient line of credit, or set up installment payments so they can ensure the succession of the business. If they're going to loan the money to the business, they want to know that that business is there for the long term. So a buy-sell agreement would allow the lender to know and give more favorable terms of that risk in the lending process.
Okay. So let's move into discussion of business owners and leasing space. So for example, if a business owner has leased a space in a shopping center or in a flex industrial building, how would a key man insurance protect that business and their employees if something happened to them, they couldn't continue their work?
Still another great question. If you're leasing the space, that's an expense that business has every single month. So they have that in their books. They know what's having to be paid out. But a key person passing causes difficulty with that business reaching its goals and its numbers on a monthly basis from that day forward. And so that payment for that lease becomes in question. If you can't pay the lease, you can't keep the doors open. You can't have your employees get paid. It affects everybody. So a key man policy would help bring in the stability for that business to continue and not worry about defaulting on the loan or the lease payment or whatever other expense you're looking at.
Mm-hmm.
So without the policy, they could certainly have financial hardship.
Okay. So you've touched on families and the legacy and all the different considerations that have to be made. So how do these policies help protect not just the business, but the families and the heirs of these business owners?
Again, it's providing the funds to do what is necessary in that buy-sell agreement. And the buy-sell agreement, operational agreement, is just basically trying to dictate what that company or business is going to be valued at, what the shares are equal to, and how those funds are going to be paid out. The funds themselves come from the life insurance or come from the disability insurance, things of that nature. You can create the installment payments for the family to be able to provide them with the calculated evaluation of the business so they get their fair share. So it does protect the family and the heirs of each owner. And it also allows the surviving owner to pick up and move forward.
Great. Again, it's about being proactive and allows so much. You're put at ease and you don't have to worry about as much when some of these events happen. What's your advice to first generation commercial real estate investors who are starting to accumulate property but haven't put a succession plan in place?
Well, the first thing you should do is try to go and speak with the attorney. You probably already had one because of the formation of the business. Go speak with that attorney about succession planning. That's really and truly what it's called. There's a lot of different avenues in succession planning, but the very first thing that they're going to want to do is figure out what the valuation of the business is. And that will change over time. As your business is growing, the valuation will increase, and you got to make changes accordingly. But without a decent valuation, it's kind of hard to put any plan in place.
Mm-hmm. So you alluded to having an attorney, having a CPA, or someone who could properly value your business. That is a critical piece to, having all the parts and all the considerations made for their business and family. So are there certain individuals you look to in your area, refer out to for guidance in that way?
I've got good relationships with most every attorney in the Hillsborough area. So I don't really, it just kind of depends on when I'm talking to business owners in this fashion as to if they already have a relationship with an attorney, then we'll work with their attorney. I'm not trying to create a new relationship. And then I've got the relationships with existing attorneys that have people come in and talk about business, and they send them to me to try to discuss this. So
that's great. If you had to give one piece of advice to business owners or landlords who are growing but haven't thought about what happens if, what would it be? What would your advice be?
Well, the succession of the business is your long-term goal. You create this business probably not just for you yourself, but also for your family. Your spouse and your kids are enjoying the fruits of your labor through their lifetime. And if death does occur unexpectedly for you as a business owner, you would want to make sure that your family kept the standards of living that they had become accustomed to. So sitting down with that CPA, sitting down with that attorney, and getting the valuation done, getting the buy-sell agreements done, gives you peace of mind that you know that your family's going to be okay. Because in any situation, life insurance is not for the one who purchases it. It's for the family they leave behind. Mm-hmm. That's typically what life insurance is all about.
Yeah. And so if they're ready to get started talking to you about buy-sell agreement and the key person insurance, what do they need to bring to the table? How do they ready themselves for a discussion with you?
Great question. The financials of the business would be ideal. So if they've been focusing on building this business and it's been a year now, and they kind of know their feet is not necessarily wet. They're grounded in the business, and they're working forward and growing the business. They need to bring those financials. They need to bring any kind of ownership details to the table. What the entity is and who all are the owners. And they need to list out any key employees that they really have when they're looking at their business. All employees are key because everybody's got a job to do, and it takes a team to make it happen. But there are just a few that if something happened to them, it's going to keep you from being able to do what you do, because now you're going to have to do double duty. Those key employees that would not necessarily be easily replaced, you need to list those out and be considering some policies for them, so the business would not falter and the families could be taken care of.
Great advice, Kelly. You gave us a lot of good nuggets today, and I would like to invite anyone to get in contact with Kelly should they want to pursue this further. As I had mentioned before, planning ahead and being proactive is so important, so that you're not left with your families and employees aren't left with a big mess in the end. I always want to be your resource for all things commercial real estate. So come talk to me. Let's have a conversation about how your business could benefit from some extra planning in the way of key person insurance and a buy-sell agreement with Kelly. So again, thank you for being here, and we'll see you another time where we can talk about another form of insurance as well that could be helpful to others.